Brazil's economy is a complex and dynamic system shaped by its rich natural resources, diverse industrial sectors, and a large, growing population. As one of the largest economies in Latin America, Brazil is a major player in the global market, driven by its agricultural, mining, manufacturing, and service industries. The country has undergone significant economic transformations over the years, from being primarily dependent on agriculture to becoming a more diversified economy with a strong industrial and service sector. However, Brazil's economy has also faced numerous challenges, including political instability, social inequality, and periodic economic downturns. Today, Brazil continues to be an important global economic force, despite facing internal structural issues. Historically, Brazil's economy was shaped by its colonial past, with a heavy focus on commodity exports such as sugar, coffee, and gold. The Portuguese colonists capitalized on Brazil's fertile land and abundant resources, establishing large plantations and using enslaved labor to fuel their economic activities. The legacy of this economic model lasted well into the 20th century, with agriculture remaining a central part of Brazil's economy. However, in the mid-20th century, Brazil began to shift towards industrialization, with the government playing a key role in developing infrastructure and promoting industrial growth. This period of rapid industrialization led to the emergence of key sectors, such as automotive, steel, and chemicals, making Brazil one of the most industrialized nations in Latin America. In recent decades, Brazil has also become a global leader in agricultural exports, particularly in commodities like soybeans, coffee, sugar, and beef. The country's vast landmass and favorable climate have made it one of the most important agricultural producers in the world. Additionally, Brazil is rich in natural resources, including iron ore, oil, and natural gas, which have fueled its economic growth. The discovery of offshore oil reserves in the 2000s further bolstered Brazil's energy sector, positioning it as one of the top oil producers in the world. These resources have helped Brazil to diversify its economy, though it still faces challenges related to income inequality and regional disparities. Despite its economic strengths, Brazil has experienced significant challenges in achieving stable and sustained growth. Political corruption, economic mismanagement, and social inequality have periodically disrupted the country's progress. The country went through a period of economic recession in the mid-2010s, driven by a combination of falling commodity prices, political scandals, and fiscal mismanagement. While Brazil has shown signs of recovery in recent years, economic growth remains uneven, with high levels of unemployment and inflation affecting the population. Additionally, Brazil's heavy reliance on commodities exposes it to fluctuations in global markets, making it vulnerable to external shocks. Looking forward, Brazil's economic future will depend on its ability to address structural issues such as corruption, inequality, and fiscal reform. The country's large population and natural resources provide a strong foundation for growth, but effective governance and economic diversification will be key to sustaining long-term development. Brazil's integration into the global economy, through trade agreements and foreign investment, will also play an important role in shaping its economic trajectory. As the country navigates these challenges, Brazil remains a crucial player in the Latin American economy and an important partner in global trade and investment. The Brazilian real, BRL, is the official currency of Brazil, introduced in 1994 as part of the Plano Real, a major economic reform plan aimed at stabilizing the country's economy after years of hyperinflation. The real, abbreviated as R$, is divided into 100 centavos and serves as the basis for all financial transactions in the country, including trade, investment, and day-to-day commerce. The introduction of the real marked a significant turning point in Brazil's economic history, bringing much-needed stability to a country that had struggled with inflationary crises for decades. Today, the real is one of the most widely traded currencies in Latin America, though its value fluctuates based on a range of domestic and international factors. Historically, Brazil had a troubled relationship with its currency before the introduction of the real. Over the years, the country experienced several rounds of currency devaluations and changes, reflecting the instability of the broader economy. Before the real, Brazil used the cruzeiro, which was plagued by hyperinflation, particularly in the 1980s and early 1990s, when inflation rates skyrocketed to over 2,000%. The cruzeiro was replaced several times by different iterations, including the cruzado and cruzeiro real, but none succeeded in stabilizing the economy. It wasn't until the plano real was introduced in 1994, under President Ademar Franco and his finance minister Fernando Henrique Cardoso, that Brazil finally achieved a more stable monetary system. The new currency, pegged initially to the US dollar, helped to bring inflation under control and restore investor confidence. The value of the Brazilian real is influenced by several factors, both domestic and international. Domestically, inflation rates, interest rates set by the Central Bank of Brazil, and overall economic performance play a significant role in determining the currency's value. For example, higher interest rates tend to attract foreign investment, leading to an appreciation of the real, while high inflation or political instability can cause the currency to weaken. Additionally, Brazil's fiscal policy, including government spending and debt levels, impacts investor confidence and the real's exchange rate. Internationally, global commodity prices, especially for key Brazilian exports like soybeans, iron ore, and oil, heavily influence the real. Since Brazil is a major exporter of these commodities, fluctuations in their prices directly impact the country's trade balance and, consequently, the value of its currency. When commodity prices are high, Brazil's export revenues increase, often leading to a stronger real. Conversely, when prices drop, the currency can weaken. Furthermore, the real is sensitive to global financial market trends, such as the strength of the US dollar or changes in interest rates by major economies like the US Federal Reserve, which can lead to capital outflows from emerging markets like Brazil. In recent years, the real has experienced significant volatility due to both domestic and global factors. The COVID-19 pandemic in 2020 led to a sharp depreciation of the currency as Brazil's economy contracted, and political uncertainty further undermined investor confidence. While the real has shown some recovery, ongoing challenges such as inflationary pressures, political instability, and fluctuating commodity prices continue to affect its stability. Additionally, Brazil's heavy reliance on foreign investment and exposure to global financial markets mean that the real remains vulnerable to external shocks. As the country works to stabilize its economy and promote sustainable growth, managing the real's exchange rate will continue to be a key priority for Brazilian policymakers. Brazil's economy is powered by three major sectors: agriculture, industry, and services. Each sector plays a pivotal role in driving the country's economic growth, with agriculture and industry contributing heavily to exports, while services and technology are vital to employment and domestic consumption. Over the years, Brazil has diversified its economic base, but it remains highly dependent on commodities. The government has made efforts to support growth across all sectors, but challenges such as infrastructure limitations, inequality, and political instability have influenced their development. Despite these hurdles, Brazil remains a global economic force due to its vast natural resources, innovative industrial base, and growing technology sector. Brazil is one of the largest agricultural producers and exporters in the world, making it a global agricultural powerhouse. With vast arable land, a favorable climate, and advanced farming techniques, Brazil leads the world in the production and export of commodities like soybeans, coffee, sugar, beef, and poultry. The country's agricultural exports are a key driver of its trade balance, contributing significantly to its foreign exchange earnings. Additionally, the agribusiness sector accounts for a substantial share of the country's GDP and employs millions of Brazilians, Brazil's ability to produce large volumes of food not only meets domestic demand, but also plays a crucial role in global food security, particularly as demand for agricultural products rises due to population growth and changing consumption patterns. Brazil's industrial sector is diverse and includes automotive manufacturing, steel production, petrochemicals, textiles, and electronics. The country's industrialization efforts in the mid-20th century helped build a robust manufacturing base, making Brazil one of the most industrialized economies in Latin America. The automotive industry is particularly important, with multinational companies such as Volkswagen, Fiat, and General Motors operating extensive manufacturing plants in the country. Brazil is also a leading producer of steel and iron ore, thanks to its rich mineral resources, and the petrochemical industry benefits from the country's significant oil reserves. Despite periodic economic slowdowns and competition from cheaper manufacturing hubs in Asia, Brazil's industrial sector remains an important pillar of the economy. The services sector is the largest component of Brazil's economy, accounting for more than 70% of its GDP. This sector includes finance, retail, telecommunications, tourism, and real estate. Brazil has a well-developed financial sector with large domestic banks and a growing fintech industry. The country's telecommunications sector has also expanded rapidly, with widespread internet and mobile phone access. Brazil's tourism industry benefits from the country's diverse landscapes, rich culture, and major events like the Carnival and past international events, such as the FIFA World Cup and the Olympics. Meanwhile, the technology sector is emerging as a key area of growth, with the rise of Brazilian startups, particularly in financial technology and e-commerce, fueling innovation. As Brazil continues to integrate more deeply into the global economy, its service and technology sectors will likely play an even larger role in shaping its future. Brazil plays a significant role in global trade, thanks to its vast natural resources, agricultural production, and industrial capacity. Its trade relationships and international agreements reflect the country's efforts to integrate into the global economy and enhance its economic growth. Over the years, Brazil has established trade partnerships with numerous countries, diversifying its export markets, while also ensuring a steady supply of imports to support domestic industries. However, Brazil's trade dynamics are often influenced by global economic conditions, commodity price fluctuations, and domestic policy decisions, which have shaped its position in international trade. Brazil's largest trade partners include China, the United States, Argentina, and the European Union. China has become Brazil's top trading partner, particularly due to its high demand for Brazilian soybeans, iron ore, and oil. This relationship has strengthened over the past decade as China's economic rise increased its need for raw materials to fuel its industrial growth. The United States is also a key trading partner, with significant trade in machinery, aircraft, and fuel products. Regionally, Argentina is Brazil's largest partner in South America, with close ties due to their involvement in the Mercosur trade bloc, which also includes Uruguay and Paraguay. Brazil's trade relationships with the European Union are bolstered by agricultural exports and industrial goods, though trade agreements between these regions are often subject to regulatory negotiations and environmental concerns. Brazil is a founding member of Mercosur, a regional trade bloc established to promote free trade and economic cooperation among South American countries. Through Mercosur, Brazil benefits from reduced tariffs and increased market access to member countries, fostering regional economic integration. Brazil has also pursued trade agreements outside Mercosur, negotiating deals with countries and regions like the European Union and the United Kingdom. Additionally, Brazil is a member of the World Trade Organization, WTO, playing an active role in global trade discussions and advocating for the interests of emerging economies. Brazil's involvement in the BRICS group, Brazil, Russia, India, China, and South Africa, further underscores its efforts to align with other large emerging economies to enhance trade and investment opportunities. Brazil's export trends are dominated by commodities, particularly agricultural products and raw materials. Key exports include soybeans, iron ore, oil, beef, and sugar, all of which are in high demand globally. The country is one of the world's top exporters of soybeans and beef, driven by its vast land and favorable agricultural conditions. Brazil also has substantial mineral resources, making it a leading exporter of iron ore, which is essential for global steel production. However, Brazil's reliance on commodity exports makes its economy vulnerable to price volatility in global markets, as fluctuations in demand can significantly impact trade revenues. On the import side, Brazil brings in a wide range of goods, including machinery, electronics, chemicals, and fuel products. The country relies heavily on imports of industrial equipment and technological products to support its manufacturing and services sectors. Brazil's import trends also reflect its growing middle class, with increased demand for consumer goods such as cars, electronics, and luxury items. However, trade deficits can arise when Brazil's imports outpace its exports, often due to fluctuations in commodity prices or domestic economic challenges. Balancing its trade dynamics remains a priority for Brazil as it navigates global economic shifts while seeking to strengthen its position in international trade. As Brazil continues to evolve in the global market, its trade policies and international relations will play a critical role in shaping its economic future. The country's ability to maintain strong trade partnerships, negotiate favorable agreements, and adapt to changes in global demand will determine its competitiveness in the world economy. Brazil has experienced significant inflationary challenges throughout its history, often linked to periods of political and economic instability. In the past, especially during the 1980s and early 1990s, Brazil faced hyperinflation, with prices rising at an alarming rate, making it difficult for citizens and businesses to plan or save. During this period, inflation often exceeded 2,000% annually, leading to a severe erosion of purchasing power. The introduction of the real in 1994, under the Plano Real economic reform, was a crucial turning point, stabilizing the currency and bringing inflation under control. However, inflation remains a persistent issue in Brazil, though at much lower levels compared to the hyperinflation era. Economic shocks, global price fluctuations, and domestic policy missteps can still trigger inflationary pressures that affect the overall economy. To combat inflation, the Brazilian government has implemented various monetary and fiscal policies over the years. The Central Bank of Brazil plays a key role in managing inflation by setting interest rates and controlling the money supply. The inflation targeting framework adopted in 1999 has been a central tool in stabilizing prices, with the central bank adjusting interest rates in response to inflationary trends. When inflation rises above the target range, the central bank often increases interest rates to reduce consumption and slow down the economy, which can help bring prices down. On the fiscal side, successive governments have attempted to implement austerity measures, cut public spending, and reform pension systems to reduce fiscal deficits, though political opposition and social unrest often complicate these efforts. More recently, inflationary pressures have been driven by external factors, such as rising global commodity prices and the economic impacts of the COVID-19 pandemic, which disrupted supply chains and increased production costs. While inflation has been controlled to some extent, Brazil continues to grapple with deep-rooted issues of income inequality and poverty, which are closely tied to the country's economic challenges. Brazil is one of the most unequal countries in the world, with a significant wealth gap between the rich and the poor. Despite being a middle-income nation with abundant natural resources, many Brazilians still live in poverty, particularly in rural areas and marginalized urban communities. Economic growth has often disproportionately benefited the wealthier segments of society, while poorer populations struggle to access basic services, education, and healthcare. Inflation exacerbates these inequalities as rising prices for essential goods, such as food and fuel, hit low-income households the hardest. The Brazilian government has introduced various social programs to address poverty and reduce inequality. Programs like Bolsa Familia, a conditional cash transfer program, have been successful in lifting millions out of extreme poverty by providing financial assistance to low-income families, particularly those with children. These programs have helped to reduce poverty rates and improve social mobility, but challenges remain. Economic instability, high unemployment rates, and the persistent wealth gap mean that many Brazilians continue to face economic hardship. Furthermore, during times of inflation, the effectiveness of such programs is undermined, as the rising cost of living erodes the real value of social transfers. Looking ahead, Brazil's ability to manage inflation while addressing income inequality and poverty will be critical to achieving long-term economic stability and inclusive growth. Structural reforms, investments in education and healthcare, and policies aimed at boosting productivity and job creation will be essential in reducing inequality and lifting more Brazilians out of poverty. However, these efforts must be accompanied by sound monetary policies and a commitment to controlling inflation, as economic stability remains the foundation for sustainable development in Brazil. Brazil's investment and financial markets play a crucial role in the country's economic development, attracting both domestic and international investors. As one of the largest economies in Latin America, Brazil offers a wide range of investment opportunities across sectors such as agriculture, mining, manufacturing, energy, and technology. However, the country's financial landscape is also marked by periods of volatility, driven by political instability, economic reforms, and external market fluctuations. While Brazil remains an attractive destination for foreign direct investment, FDI, investors must navigate the challenges associated with currency fluctuations, inflation, and regulatory changes. The Brazilian Stock Exchange, known as B3, Brasil, Bolsa, Balcão, is one of the largest stock exchanges in the world by market capitalization and serves as the main hub for trading stocks, bonds, commodities, and derivatives in Brazil. B3 was formed through the merger of BM and Bovespa and CETIP, creating a unified financial market infrastructure for the country. It offers investors access to a diverse range of companies, including some of Brazil's largest corporations in sectors such as banking, energy, and consumer goods. Notable companies listed on B3 include Petrobras, oil and gas, Vale, mining, and Itaú Unibanco, banking. The stock exchange also plays a key role in fostering market liquidity and enabling capital flows into the Brazilian economy. However, B3's performance is often influenced by external factors, including global economic trends, commodity prices, and political developments, which can lead to periods of heightened volatility in the market. Foreign direct investment, FDI, has historically been a major driver of Brazil's economic growth. The country has attracted significant investments from multinational companies, particularly in sectors such as natural resources, infrastructure, and manufacturing. Brazil's vast mineral reserves, agricultural production, and large consumer market make it an appealing destination for foreign investors looking for growth opportunities. FDI inflows have remained relatively strong, even during periods of economic and political uncertainty. In recent years, sectors such as renewable energy, technology, and fintech have gained increased attention from foreign investors, reflecting Brazil's efforts to diversify its economy and encourage innovation. However, Brazil's reliance on commodities means that FDI trends can be influenced by global demand for raw materials and fluctuations in commodity prices. Despite the opportunities, investors in Brazil face several risks. Political instability, such as corruption scandals or shifts in government policy, can create uncertainty in the financial markets and impact investor confidence. Additionally, Inflationary pressures and currency volatility pose significant risks to investors, particularly those with exposure to the Brazilian real, BRL. The depreciation of the real in times of economic uncertainty can lead to capital flight and reduced returns for foreign investors. Furthermore, Brazil's regulatory environment can be complex, with frequent changes in tax policies and labor laws that can affect business operations and investment strategies. On the flip side, the opportunities for investors in Brazil are vast, particularly in sectors that are poised for growth. Brazil's energy sector, particularly renewable energy such as wind and solar power, is a key area for investment, driven by the country's efforts to transition to cleaner energy sources. The technology sector, especially fintech, is also expanding rapidly, with Brazil emerging as one of the leading hubs for digital innovation in Latin America. Additionally, Brazil's agribusiness sector remains a cornerstone of the economy, with strong export potential due to global demand for food products. As Brazil continues to modernize its infrastructure and improve its business environment, sectors such as transportation, logistics, and healthcare also present promising opportunities for both domestic and foreign investors. In conclusion, Brazil's financial markets and investment landscape offer both opportunities and risks. The country's large consumer market, rich natural resources, and growing sectors such as technology and renewable energy make it an attractive destination for investors. However, managing the risks associated with political volatility, inflation, and currency fluctuations is essential for success. For investors willing to navigate these challenges, Brazil remains a market with significant potential for long-term growth and profitability. Brazil's fiscal and monetary policies are central to managing its economic stability, growth, and inflation. The Central Bank of Brazil, Banco Central do Brasil, plays a key role in maintaining monetary stability, while the government's fiscal policies, including taxation and public spending, are crucial for managing economic development and addressing social inequality. These policies are often shaped by Brazil's need to balance economic growth with controlling inflation, reducing public debt, and managing the impacts of global economic trends. The Central Bank of Brazil is the primary institution responsible for the country's monetary policy. Its main functions include controlling inflation, regulating the financial system, and maintaining the stability of the national currency, the Brazilian real, BRL. The central bank's most important tool for managing inflation is setting the benchmark interest rate, known as the Selic rate. By raising or lowering the Selic rate, the central bank influences borrowing costs and overall economic activity. For instance, increasing the rate can reduce inflation by discouraging borrowing and spending, while lowering it can stimulate economic growth by making credit more affordable. The central bank also manages the country's foreign reserves, oversees financial institutions, and monitors systemic risks within the financial sector to ensure the stability of Brazil's economy. Fiscal policy in Brazil is managed by the federal government and involves decisions regarding public spending, taxation, and borrowing. Historically, Brazil has struggled with high public debt and deficits, driven in part by large social welfare programs and infrastructure projects. While these programs aim to reduce poverty and boost economic growth, they also place a significant strain on public finances. In recent years, Brazil has implemented austerity measures, including public spending cuts and pension reforms, in an effort to reduce its fiscal deficits. However, these measures have often been met with political resistance and public protests, as they impact social services and job creation. The government's ability to balance public spending with economic growth is a key challenge, as maintaining fiscal discipline is necessary to avoid excessive debt levels, while still addressing the country's social and infrastructure needs. Taxation in Brazil is complex and often seen as one of the most burdensome systems in the world. The country has a high tax burden relative to other emerging markets, with taxes making up a significant portion of the country's GDP. Brazil's tax system includes federal, state, and municipal taxes, covering income, goods and services, payroll, and property. One of the main criticisms of the Brazilian tax system is its complexity and inefficiency. Businesses often face difficulties navigating the numerous taxes and regulations, which can act as a barrier to investment and economic growth. Additionally, the tax system is seen as regressive, with indirect taxes such as the value-added tax, VAT, disproportionately affecting low-income households. Despite ongoing discussions about tax reform, progress has been slow, with competing interests making it difficult to implement comprehensive changes. In recent years, Brazil has sought to reform its fiscal policies to promote greater efficiency and transparency in public spending, while addressing the country's significant social challenges. One of the most notable reforms was the introduction of the spending cap in 2016, which limited the growth of public spending to inflation rates for the next 20 years. This measure was intended to control public debt and bring fiscal sustainability, but it has also constrained government spending on crucial areas, such as healthcare and education. Additionally, pension reform in 2019 aimed to reduce Brazil's large pension deficit, which had been a major contributor to the country's fiscal challenges. While these reforms were necessary to stabilize public finances, their long-term success depends on the government's ability to maintain political support and implement further reforms to boost economic growth and reduce inequality. In conclusion, Brazil's fiscal and monetary policies are shaped by the need to manage inflation, reduce public debt, and promote sustainable economic growth. The Central Bank of Brazil plays a critical role in controlling inflation and maintaining financial stability through its management of interest rates and the financial system. Fiscal policies, including public spending and taxation, are aimed at balancing the need for economic development with fiscal responsibility, though the country continues to face challenges in implementing reforms and addressing inequality. As Brazil moves forward, the success of its fiscal and monetary policies will depend on the government's ability to maintain stability while fostering inclusive economic growth. The future of Brazil's economy is shaped by both challenges and opportunities as the country navigates internal reforms and external economic forces. Brazil's vast natural resources, large domestic market, and strategic position as a leading Latin American economy provide a solid foundation for growth. However, structural issues such as corruption, political instability, and the need for comprehensive economic reforms pose significant obstacles to sustainable development. The key to Brazil's economic future lies in addressing these challenges while capitalizing on potential growth sectors that can drive long-term prosperity. Corruption and political instability remain persistent challenges for Brazil's economy. Over the years, high-profile corruption scandals have undermined public trust in the government and led to frequent changes in leadership, creating uncertainty in economic policy. These political upheavals have, at times, delayed critical reforms aimed at improving fiscal responsibility, reducing public debt, and boosting investor confidence. Tackling corruption and ensuring political stability are essential for Brazil to create an environment conducive to sustainable economic growth. Efforts to strengthen institutions, improve governance, and increase transparency in public spending and contracts will be vital in restoring investor confidence and stabilizing the economy. Economic reform is another pressing need for Brazil. The country must address issues such as high taxation, bureaucratic inefficiency, and labor market rigidities to create a more competitive business environment. Brazil's tax system is often seen as overly complex, deterring foreign and domestic investment, while outdated labor laws make it difficult for companies to hire and operate efficiently. Comprehensive tax and labor reforms, along with measures to simplify regulations, are necessary to enhance productivity and attract greater investment. Furthermore, Brazil needs to continue with pension reforms, infrastructure development, and public spending optimization to improve its long-term fiscal health. Reforming public services and reducing social inequality will also be crucial to promoting inclusive growth across the country. Despite these challenges, Brazil has significant growth potential in several key sectors. Agriculture remains one of the country's most important economic drivers, with Brazil being a top global exporter of soybeans, beef, coffee, and sugar. As global demand for food increases, Brazil's agricultural sector is well positioned to capitalize on this growth, particularly as advancements in technology and sustainability improve efficiency. Additionally, Brazil's energy sector offers considerable potential, particularly in renewable energy. With vast resources in wind, solar, and hydroelectric power, Brazil can become a global leader in clean energy, attracting investment in sustainable infrastructure and technology. The technology sector is another area with strong growth potential, driven by Brazil's growing startup ecosystem and digital innovation. The fintech industry, in particular, has experienced rapid expansion, with Brazilian startups leading the way in digital banking, payments, and financial services. E-commerce and digital platforms are also on the rise, spurred by a large and increasingly tech-savvy population. As Brazil's internet penetration and mobile phone usage continue to grow, the technology sector will likely become a key driver of economic diversification and innovation. Moving forward, Brazil will continue to play an important role in the global economy. As one of the largest emerging markets, Brazil is a key player in global trade, particularly in commodities. The country's abundant natural resources make it a significant exporter of raw materials, including agricultural products, minerals, and energy. Brazil's integration into global supply chains and its participation in multilateral organizations such as the World Trade Organization, WTO, and BRICS, Brazil, Russia, India, China, and South Africa, will further shape its position in international trade and diplomacy. Additionally, as Brazil focuses on sustainability and environmental issues, it has the potential to become a leader in green technology and sustainable development, which will be increasingly important in the global economy. In conclusion, while Brazil faces significant challenges in terms of corruption, political instability, and the need for economic reform, it also has substantial opportunities for growth in sectors such as agriculture, renewable energy, and technology. By addressing its internal issues and leveraging its strengths, Brazil can position itself for long-term economic success and solidify its role as a major player in the global economy. The country's future will depend on its ability to implement necessary reforms, create a stable political environment, and foster innovation across its industries.